Welcome back. Okay, so let's try and unpack this. What our sources are showing us today is, well, it's like a world running at two totally different speeds.
Absolutely.
You've got this, exponential tech growth, AI just booming, demanding companies pivot almost instantly.
Yeah, like right now.
But then on the other side, you've got sudden trade wars popping up, political gridlock, just bureaucracy slowing everything else down, massive friction points.
It's a real clash, isn't it? So our deep dive today is looking right into that. The corporate mandate to move at AI speed, these really aggressive financial and people strategies companies are using.
Right.
And then we contrast that with all the market volatility coming from, well, policy frictions, like this political drag chute holding things back.
And the numbers here are they're staggering. We're going to dig into Accenture's pretty stark ultimatum to its workforce. It's huge.
Yeah.
Then there's this multi-trillion-dollar fight, literally, to build the physical stuff for AI.
Infrastructure.
And the shockwaves from these new tariffs on everything from, like, big trucks to prescription drugs you might need. So let's jump into that acceleration first. Section 1.
Okay, here's where it gets really interesting, I think. The speed of AI adoption. It's not just fast. It feels almost make or break for some companies.
Definitely.
It's changing what a stable job even looks like almost overnight. And you see leaders making these huge structural changes to just try and keep up. Accenture's a perfect case study here.
Yeah, their CEO, Julie Sweet, she was incredibly direct about it. She talked about a compression timeline for changing the workforce.
A compression timeline.
Right. And get this, they had this massive $865 million program for business optimization. Sounds corporate, right? But it's expected to save over $1 billion. And that cash, it's immediately tagged to be plowed right back into AI growth. It shows you, like, HR decisions are now core capital allocation strategy. So the message is basically, adapt or you're out. The sources say Accenture plans to exit staff who can't retrain and retool on the latest AI. They're calling it a strategic mandate.
It's aggressive, no doubt, but they're also showing massive scale on the other side, the reskilling part. They reported 7% revenue growth, and they pin that directly on clients demanding AI deployments.
Okay.
So to meet that, they've apparently already reskilled 550,000 workers on the basics of generative AI.
Wow, 500,000 people.
Yeah. And their actual employed AI and data expert headcount, it's almost doubled from about 40,000 in 2023 to 77,000 expected in 2025.
But is that huge reskilling push really going to stick? Or are they just, training people up for their competitors to grab? It feels like running flat out just to stay put.
That's the core tension, right? They have to do it.
Right.
Because if they slow down, they lose the race completely. And that race, it needs just astronomical amounts of physical infrastructure. OpenAI is really pushing this.
Right, Sam Altman.
Yeah, their CEO, Sam Altman, said the company should expect to spend trillions of dollars on building data centers.
Trillions. With a T, what does that even buy?
Yeah.
It's more than just chips, right?
Oh, yeah. It's buying scale that's just hard to wrap your head around. We're talking huge deals like $400 billion committed for this Stargate project with Oracle and SoftBank.
Stargate, okay.
Plus another $100 billion investment from NVIDIA. But the physical challenge, that creates huge execution risk. The power needed is estimated at 17 gigawatts.
17 gigawatts.
To give you a sense of that, it's like the power needed for about 17 nuclear power plants.
Whoa.
So you need land, you need specialized cooling systems, you need to win massive political fights over where the energy comes from, getting permits. It's immense.
That really puts the risk in perspective. Okay, but the rivals aren't just sitting around waiting for Stargate to get built, right? Anthropic, the Claude AI people.
No, they're moving fast. Anthropic's making a big international push. They're tripling their global workforce, expanding their applied AI team 5 times over in 2025.
Fivefold.
They're basically following the demand.
Right.
Nearly 80% of Claude's usage is actually outside the U.S. now. And they're showing these really concrete results. Like right now.
Which is driving their revenue, I guess.
Massively. They hit a $5 billion revenue run rate, which is incredible, up from just $87 million at the start of 2024.
And they're delivering actual efficiency gains people can see. Our sources mentioned Anthropic helped Novo Nordisk, the pharma giant, cut drug analysis time from 3 months down to just a few days.
Incredible speed up.
And in finance, Norway's Norges Bank used their AI to save 213,000 hours. That translated to a 20% productivity boost.
A 20% gain in a sovereign wealth fund. That kind of thing really reshapes entire sectors. And this hyper-efficiency is already filtering down to the application level, too.
Right, down to things like customer service bots.
Exactly.
You see tools like Zoho Desk offering sentiment analysis, figuring out instantly if you, the customer, are getting annoyed. Or Fin, offering no-code setups so businesses can quickly get chatbots running on their own knowledge bases. Even Zapier has a free plan for custom chatbots now. It shows how fast this tech is becoming available for, well, pretty much everyone. Okay, so this efficiency is changing everything, even down to chatbots. But that private sector speed, it always seems to hit the wall of, global policy and market swings. Let's pivot now to that friction, the stuff being driven by economic indicators and sudden policy risks.
Yeah, exactly. Amidst all this AI acceleration, you still have the traditional economic data moving markets. We just saw the Fed's preferred inflation measure, core PCE.
Right, personal consumption expenditures.
That held steady. Came in at 2.9% year over year for August, which was pretty much what everyone expected. Headline PCE was 2.7%.
And the consumer is still spending, right? That number was a bit higher than expected.
Yeah, personal consumption rose 0.6%, a little hotter than forecast. So the consumer's proving resilient, which, it supports the economy, but it kind of dampens hopes for really big Fed rate cuts soon.
Right. You combine that spending with the fact that Q2 GDP got revised up to a strong 3.8%.
A strong number.
And the market takeaway is a bit cautious. Like, okay, maybe we still get 2 more quarter-point Fed cuts in 2025. But that confidence is fading a bit because the economy is just holding up so well right now.
And just as we get that sort of stable, maybe slightly cautious picture, bam, sudden policy risk hits. President Trump announced a whole new round of tariffs effective October 1st. Targeting specific domestic goals, it seems.
Okay, let's break down the volatility that created literally overnight. First, heavy trucks.
Yeah, a 25% tariff on imported heavy trucks, clearly aimed at helping U.S. makers like Peterbilt and Kenworth.
And the market reaction.
Instant. PACCAR shares jumped 5% to 7% right away.
Wow. Then pharmaceuticals. That sounded aggressive.
Very aggressive. A massive 100% tariff on branded or patented drugs. But, and this is the key part, there's a carve-out.
Okay.
Companies are exempt if they commit to building manufacturing plants here in the U.S.
So that carve-out is complex. It feels specifically designed to force companies to spend capital onshore, a big regulatory lever.
Absolutely. And you saw domestic stocks like Eli Lilly and Merck get a boost, up 1% to 1.5% on the news. They're seen as having an advantage now.
But not everyone wins. Consumer goods got hit.
Right. Conversely, pain was felt quickly there. A 30% tariff on imported upholstered furniture. That sent shares of retailers like RH and Wayfair down 3% to 4%.
So these policy decisions, they translate almost instantly into market winners and losers. Incredible speed.
Yeah, the political agenda directly impacting stock prices.
And speaking of domestic friction, we're back to potential government shutdown risk, aren't we?
Yes, the clock is ticking again. Congress has just 4 days left, basically, to pass a funding bill, a continuing resolution before the Tuesday deadline.
And if they fail, what are the consequences?
Well, immediate ones are furloughing potentially hundreds of thousands of federal workers deemed non-essential. Remember 2013, 850,000 were sent home then. Parks close, museums close.
Yeah.
But the real market risk is the delay in releasing critical economic data. We'd lose the monthly jobs report, the CPI inflation numbers, initial GDP estimates.
Okay.
That kind of data blackout, it really shakes market confidence, creates instability, which, it raises a really important question. When the federal government itself is facing these kinds of friction points, shutdowns, how does that pressure show up in policies that affect citizens directly?
Well, we saw some immediate friction just recently at the CDC. There was a directive from HHS Health and Human Services.
Right.
And it led to them removing over a dozen CDC web pages. These were related to sexual and gender identity, health equity.
Yeah.
Happened around September 19th.
What kind of pages specifically?
Things like STI info for gay men, pages explaining asexuality, bisexuality, resources on health equity for people with disabilities, quite specific stuff.
And the official reason?
HHS said it was to, and I quote, align their website with administration priorities and executive orders. But, health advocates immediately pushed back. They warned that removing this trusted, specialized info, it erodes trust in the CDC, and it actually puts marginalized communities at greater risk because those critical health resources just disappear.
A definite friction point there.
Okay, now switching gears completely. Let's talk wealth and immigration policy. We saw President Trump make a big change to the gold card immigration plan.
Yeah, he slashed the price, didn't he?
Dramatically. from $5 million down to $1 million. And promising speedy residency for wealthy individuals, this is defined as a non-refundable donation, by the way.
Right, a $1 million donation. And the main attraction for the global elite here is, well, it's access.
Access to what?
Access to the U.S. education system, the healthcare system, and, of course, the world-leading banking and financial systems. That's the big draw.
But even with the price cut, there are still hurdles, right? Bureaucratic ones.
Oh, yeah, immediate obstacles, because the program uses the existing EB-1 and EB-2 visa categories.
Okay, and why is that a problem?
Because for applicants from countries like China and India, those visa lines already have huge backlogs. So even after you donate your $1 million, you could still be waiting years to actually get the residency. The friction point is baked right into the existing visa system.
So the speedy part might not be so speedy for everyone.
Potentially not, depending where you're from.
Okay, and finally, let's bring this whole speed versus friction idea back to the public service sector. We talked about how fast AI is moving in corporations.
Right, the compression timeline.
Now compare that to the speed of the government processing its own programs, like debt relief. The backlog for the public service loan forgiveness buyback, it's ballooned.
How bad is it?
Up to 74,510 applications waiting as of August 31st. That's up nearly 10,000 just since June.
Wow. 74,000.
These are people, remember, who did their 10 years of public service. They're just waiting off in months for the government to process their buyback offers so their debt gets cleared. And part of the delay, staff terminations at the education department.
So you've got people who fulfilled their end of the bargain hitting this wall of bureaucracy.
Exactly. It's just a stunning contrast visually, isn't it? The hyperspeed change in the private sector versus this slow grind for public servants waiting for relief.
It really is. And, alongside all this, we still saw some classic corporate plays happening.
Like what?
Well, Ames Watson bought Claire's, the tween retailer that went bankrupt, paid $140 million.
Claire's, I remember them.
Right. They called it a broken business, not a broken brand. The plan is basically nostalgia plus upgrades, better merchandise. They're apparently eyeing a sleepover product line.
Okay.
And modernizing the ear-piercing experience with the new piercing excellence team.
A piercing excellence team.
Yeah. And then at the other end of the deal spectrum, Electronic Arts, the video game giant. Their stock surged 15%.
Why?
Reports that they're close to a deal to go private, a roughly $50 billion deal.
$50 billion for EA.
Yeah. If it happens, you'd be the largest leveraged buyout LBO ever recorded. Huge potential deal.
So that really was a deep dive, wasn't it? Into these, twin forces shaping the world here in late 2025. You've got the incredible multi-trillion-dollar scale of AI infrastructure being planned and built.
Defining that urgency for companies like Accenture.
And then the very real, very immediate impact of trade policy shifts and just systemic government friction points slowing things down elsewhere.
Yeah, what we've really seen today is that critical tension between incredibly rapid technological change and the inherently slow, often political pace of human systems.
Right.
You've got major consulting firms telling their massive workforce, you must reskill now on this compression timeline, while at the exact same moment, the government's struggling to process simple debt relief applications for tens of thousands of dedicated public servants. The contrast is stark.
Which really brings us to our final provocative thought for you, the listener. Think about this. The Anthropic sources. They show AI delivering massive productivity gains right now, saving financial institutions like Norway's Norges Bank 213,000 hours of work, instantly boosting efficiency.
Huge gains.
Simultaneously, the PSLF sources show that backlog. 74,510 public service workers just waiting for months for basic loan relief processing. So the question is, how fast will governments adopt AI for their own critical back-end processes, things like student loan forgiveness, before the knowledge and experience gained from all that public service work is itself deemed kind of obsolete by the accelerating pace of technology everywhere else?
That's a heavy question.
Something to definitely think about as you navigate this incredibly fast-changing world.